Hello, and welcome to the Decision Point Show with Erin Swenlin and my father, Carl Swenlin, who is joining me. You can catch us on Thursday afternoons, evenings on StockCharts TV. I do hope that you will join us every Monday. We've got a lot to cover, but how's it going up your way, Dad? I know the smoke has still been pretty bad here. I know.
Yeah, it's actually, we've been pretty fortunate here at Redlands and haven't got too much.
Right. We were
But it's pretty bad some places.
Yeah, we were fortunate in having the gender reveal fire as our fire.
Hey,
I'm sure everybody's read about that. So that one, fortunately, is mostly contained now, I think, about halfway, which is better than some of those other fires. So not too bad. All right, well, let's see what we have on the agenda today. Lots to cover as usual. The free trading room on Mondays. I will talk about this very shortly in our next slide. Lots of fun. I'm going to go over the Nasdaq and the technology sector. I think with the rebound, some of the questions I found in the trading room this morning was about, is it time to get back into technology? Is this the rebound we've been waiting for, et cetera? So we'll look at those charts and see what they're telling us about that. Carl's going to be talking to us about seasonality right now because I think I've heard it talked about a little bit, but not as much as it probably could be as far as unfavorable seasonality that we're getting ready to enter. And we will also look at one of the indicators Carl's going to concentrate on today is the percent of stocks above their 20, 50, and 200-day EMAs in the S&P 500. I know I've been watching that indicator pretty closely, Dad, and it certainly has a story to tell.
right?
We will look at natural gas. That's still a favorite. I did get asked about natural gas this morning in the trading room, so we will cover that at the end of the show. And finally, I will finish off with the diamond of the week. It happens to be one that I gave to my diamond subscribers on Thursday, and it has made a little bit of a move to the upside as I was hoping. And I think the chart still looks very bullish, so I'm going to share that with you at the end of the show. All right, so let's get going. As I said, we have a free Decision Point trading room now, live on Mondays. I love it. I get to interact with all of you live. It's very intimate. We don't have a lot of people not a lot of people have found it yet. Once they do, I think we're going to have quite the audience. But for now, our Decision Point faithful can really get their fill of Decision Point by going to our free trading room. So if you haven't signed up for it yet, just go ahead and sign up for our free email list and I will notify you when the registration links are available. And you'll also find those registration links in our Decision Point blog articles. So you can always go there, and the Chart Watchers articles, I always put them in there as well. All right, Decision Point Scoreboards. We have had quite a bit of a shakeup. We didn't record last week, and since last week, we have seen some shakeup here on our indicators. The short-term trend models all went into neutral. As I mentioned when I wrote about this in the Decision Point Alert on Thursday, this isn't really one of the models that we follow very closely. It's based on 5-day EMA and 20-day EMA crossovers, and they aren't always that helpful, but it's good to see just overall what the trends are doing. And in the short term, we're on neutrals currently. I'll have to go take a peek at those charts now that they've gone final. But the other important thing to note is we lost the momentum on the PMO. We had sell signals come in. We had September 4th ones here for the Dow and the S&P 500. S&P 100 and Nasdaq 100, they came in later on last week. So something just to be aware of.
Aaron?
As far, oh, yes.
Those signals make a point that they're not action signals, they're those information signals. And it just lets you know that there's weakness in that particular time frame.
Exactly. It's really a great way to take the temperature of what's going on in the market currently, because you're right, these aren't actionable signals, but really we say often not to use mechanical signals as your call to action. It's just you need to have that analysis behind it. You always should look at a chart. So good point for that. And in the same vein here, the DecisionPoint sector scoreboard, you can see right now mostly in the green, energy still lagging. I haven't seen anything on that energy chart that tells me those signals are going to change anytime soon. And financials, we're still looking at a 50-day EMA below the 200-day EMA on the financial sector. So that's currently what we're looking at there. And I think it is time we go and look at some charts. So let me get over there. All righty. You can see this okay, right?
I can.
Excellent. Okay, so what are you thinking about this chart right now, Dad?
It's be interesting. It's not easy to see the last 5 days, even though we have. Do you have? Yeah. Let's look at that one. See, I add to support and resistance lines. That's basically where we're trapped in the short term, and could go above that. I was thinking, yeah, but 350s is about the target if you look at that short-term double bottom. So there could be some higher prices here, but you know, we're kind of in the opinion that it's not finished going down.
Yep. I have to say, I mean, it's interesting. The 50-day EMA, it barely held up Friday because we did get a dip below it. But right now it does seem like we're holding there between that 20 and 50-day EMA. And, I'm not seeing anything yet on the charts that tell me to expect a big time breakout anytime soon. But I have to say, I'm not really seeing the negativity either to expect a big breakdown here.
Look at the volume. The volume today and Friday was below average, below the 1 year average.
Yep.
So.
Yep. So
with the move up today, it would have been better if the volume had expanded somewhat.
Right. We didn't see that. The RSI is getting toward positive territory yet again. I mean, we didn't dip even into oversold there on this one. It's, I don't see a lot of strength here, but I don't see a lot of weakness either in a major way. It just really has the
right
earmarks of moving sideways mostly. All righty. So I did say
was hitting the moving average.
Yes.
It's basically it's basically overbought right now.
Yes.
Since it was operating below the moving average.
Yep. And it's interesting because I know 2 weeks ago when we had our DecisionPoint show, we hadn't seen the volatility. We were still looking at a squeeze on the volatility index, and we both were talking about how does that get relieved? Well, generally, of course, with high volatility, which generally doesn't lead to an upside move. So we got that. Those Bollinger Bands have really expanded now. So it will be interesting to really think about overbought and oversold right now. And I agree, we're now at that moving average. Typically, if you stay below it, that's tells you there's weakness and problems in the market. And based on this trading range, I don't know. I will be interested to see if the VIX goes any lower tomorrow at this point. But, we're looking at a lot of consolidation here.
And now is as good a time as any to
talk seasonality.
Talk about seasonality.
Sure, go ahead.
For September, so they have a seasonality tool on StockCharts, but I had no luck in getting it to prove my point. But take my word for it. September is really a worse month than October, and it's had some pretty bad downturns. So this is not a good month, nor is October. October has a better chance of being a good month if September is really bad.
Right. Those end of month, the end of year has its own excitement, but yeah, you can see how a lot of times that's when you get that failure is right in that September, October area.
And of course, we are towards the end of the negative seasonality periods, September, October, yeah, September and October are the last 2 months of this 6-month negative seasonality period.
Yep. So, okay, let me go ahead to let's look at a Nasdaq chart here. And here we go, make it big. Look at what's going on here right now. So this is the Nasdaq composite, of course, heavily weighted toward technology. And if you recall, when we looked at the S&P 500 chart, some similarities, I would have to say, but notice the RSI is, while it is starting to climb, it's still very, still in that negative position. And again, we had that up day today, but as you pointed out, Dad, you've got this volume bar that's...
It's not an enthusiastic expansion of volume.
Absolutely. So the 50-day EMA has been kind of holding up, if you will, here for the Nasdaq composite. And again, I get the sense that we're going to have some consolidation here. I just don't see a lot. You don't have the momentum going in your direction. You can see right now the OBV is still confirming the decline that we're in right now. I just don't see anything too exciting here for technology. And I think that brings us to a good time to talk about the technology sector in general, and maybe look at Apple afterward. I still get questions about that in the trading room, it seems, every time. So we did lose that 50-day EMA. You can see where it poked down there on Friday, but we did get back into this rising trend, as you can see with XLK. But again, look at the underlying technicals here. I just don't see the kind of information that you would want to see before you're going to get a breakout or a nice bounce. I mean, we're just not, the participation isn't there. We are seeing oversold readings at this point, I think, which is a positive. But you have a pretty nice rebound today. What was it? Over 2% rebound. And you just didn't see a whole lot of improvement with the stocks above their price above their 20. And then look what's going on with the stocks above their 50. It actually declined today. So I don't have a lot of faith that we're looking at a giant bounce in technology coming up. I think it's a holding pattern for now. And that at XLK, that 110 level is going to be really important as far as support goes, I would have to say.
That's a reverse flag formation too.
Absolutely. And you can see a lot of that on a lot of these technology charts right now. And it's something to consider. We are holding support so far, but if you look at that chart pattern, the reverse flag is you get the big downside, that capitulation, and then you start to consolidate that move somewhat, and then you get the next downtrend at that point. And so that's kind of where it looks like we could be headed, is lower prices. And I think ultimately in the very big picture, intermediate to long term, I'm looking for a decline past this level for technology. All right. So since we're in tech, I'm going to take a quick peek at the Apple chart. And I think I have one that you used. And that would be one. I think we have a longer term one in here too, do we? No, we don't. But a lot of people talking about Apple. And we have gotten some kudos, Dad, on the article you wrote last week about stock splits. And we had talked about the pending splits for Apple and Tesla on our show 2 weeks ago with the, I wouldn't go so far as to say warning, but we certainly, you pointed out in particular what tends to happen after stock splits in general, but also with just the character and personality of Apple, you tend to get those big moves and then you get a really large drawdown. And the stock split was probably a great excuse to start that correction in Apple that really needed to happen.
Yeah, can you put up the monthly chart?
Mm-hmm. I don't have the one you've annotated, but I do have the monthly version.
But you can see there's the swoosh upward, the parabolic up move, and you don't know when those things are going to break, but they always do. And most likely is the pullback, and somewhere between 30 and 50%.
Yep.
It's already done 20%.
Yeah. There you go. So down here is that next really important support level, but that's 41% from the top that we saw back here. I mean, I don't know if we're going to see that sort of a pullback, but there's certainly, you can see we're still well above these 6 and 10 period EMAs right now on the monthly chart. Yes, I have to say the PMO does look quite good, but I would expect that in a parabolic move like this.
Right. Yeah.
It would be unheard of for momentum to be moving south when you have this kind of a move. I know you had something else to talk about besides seasonality. You had an indicator chart that I know I've been watching very closely as well.
Yeah, well, let me take it and I'll bring that up.
There we go.
We were talking about the moving averages of stocks above the 20, 50, and 200 EMA. You see what kind of a negative divergence we had before the big break in February. And now this is a little longer. So like these are pretty short and steep, but still we have this difference of on all these moving averages, which means there are fewer stocks holding it at this peak than there were at this peak. And one of the things that I wanted to point out is like here we had a confirming move. All these things matched the move upward into this top, but confirmation doesn't really tell you very much. When it gets overbought, then you should still be a little wary and cautious about pullbacks. And here we do have non-confirmation, the negative divergence on this higher top. And so a negative outlook right at this time. And I'm still expecting more downside. Of course, I always am, aren't I?
Well, as you said, I mean, it's exactly right. You've got fewer stocks that have been holding up that big rally. And now we're seeing that fall way down. And even as we try to move up, you're just, in that thumbnail, I mean, we're just not seeing any improvement really,
The big problem with these indicators are equal weight. They're equally weighted. Every stock has an equal vote, whereas the price index itself is cap weighted. So there can be fewer stocks performing here, but they could be the large cap stocks that carry the index. Still, it's not a happy situation.
No, absolutely not. And oh gosh, which chart was I looking at this morning? It was the percent of stocks with PMOs rising. I don't know if you have that handy, but I thought that one was interesting because you could see that even though we had a really nice up day, at least I know on Thursday, you had a decline in stocks that had positive momentum. I mean, that's certainly a negative divergence.
Yeah, let's see. I think that one is on the
short-term indicators now.
Chart. There's the bottom one.
Yeah.
So, yeah, the PMO may not be rising, but it's like right here. Or, I mean, what happens is you get an up move, and then the PMO, where the market loses its momentum, starts slowing down, they can still climb higher. So a PMO top is is a good signal to start looking for an entry if you're trying to get out or want to go short. But yeah.
Yeah,
Yeah,
absolutely.
there was another one I wanted to look at, and that would be, what do we have today on these? Yeah, this is not really great. We've got prices going up, and then the ITVM heading lower, and here's the PMO crossover buy signals, and that's getting low. There's only 18% of stocks that are on that, so that is not when you get a PMO sell signal, that's not necessarily the end of the world, but it's still a much weaker situation than when you got this.
Absolutely. So those are the things that to consider at this point, as far as the bounces as well. I like seeing those Swenlin trading oscillators on the other chart you had. They're starting to bottom, it appears. Now, I don't know if they had updated completely, so that would
Trading
be.
oscillator, okay,
Yeah, the Swenlin trading oscillators. Yeah.
Right. They've been in this fairly narrow range for, well, quite a few months now, and they're coming up off the bottom, but this is a very shallow oversold level, and this is a very shallow overbought level. So there's not, it's kind of, it's almost neutral, you would have to say.
Yep. And again, so you see those, they are trying to bottom and improve a little bit, but again, I just don't see the participation underneath when I look at those indicators. And that, to me, I like to see fuel for that fire. And, we had the fuel with the FANG stocks and Tesla and everybody holding up these indexes, but they're just not there right now. Could see a bounce in them, but like I said, if you look at the Apple chart, it's not particularly bullish.
Well, we talk about market bias a lot, but change the subject a little bit. And basically, market bias has to do with is the market has a bullish bias or a bearish bias, and by knowing that, you can apply a little spin to your possibility of coming out ahead on a particular trade. In other words, right now, market bias is about neutral, moving downward, but it's actually still in a neutral situation, but it's moving in the wrong direction. So, if you try to go long right now on a trade, the massive stocks are going in the opposite direction. Just something that I've been trying to clarify the last year or so, and it's probably not there yet.
Well, I mean, it just makes sense, right? You're kind of swimming against the current if the short-term bias or trend is bearish, and when you're sitting in neutral, you're just really, while you're not bearish, you're still not really bullish either. So what are you gonna, you need to get something behind a trade. And you certainly want to see a more bullish bias in the market. That's going to certainly improve your odds, if nothing else.
Let's move over to UNG now.
Absolutely.
This is one, I think I'm the one that picked this out for you.
You did, and I tell everybody you texted me of all things too, Dad. I don't know if you remember. You texted me and you're like, have you looked at UNG lately? And I pulled the chart open. I was like, oh my goodness, this is a nice looking chart.
But the reason I looked at it was this double bottom. I looked at it around here. And with that double bottom, I did expect it to go higher. although it actually kicked me out when it did that for a bit. But it was a good pick at the beginning, you know. And
Yep, Diamond subscribers are pretty happy, and actually Chart Watchers, the free Chart Watchers article that I wrote on UNG should have helped. But I did,
notice you
yeah,
have
I did write about that topping action going on when it
you
dropped.
got a rising wedge, not too narrow, but a rising wedge. You expect that to break down. Not always this much, but now you've got a falling wedge, and it just broke out of that. Now that doesn't mean we're going to go up an equal amount. I personally think it's going lower.
Mm-hmm.
The reason I do is because it's part of the energy complex, and it's the only thing that was doing any good in the energy area. And here's the energy sector, and it looks terrible. So
Yeah,
I
absolutely.
would be careful with the UNG, but we'll see something that looks like a good chance to get back on.
There certainly seems to be better areas of the market, but it's, you know, it turned out to be really interesting. I think if we, you know, not to look too far ahead here, but even if we get that rally and it goes up somewhat and it fails at like $13, that's almost textbook head and shoulders that will have formed. So
Yeah.
Something to certainly consider as well. But, you know, right now there might be a little short-term ride possible.
Yeah, well, I was looking for this because it was really heading down pretty fast there, and I just think you got to look. Oh, looks like we've got the 2-minute warning.
Oh, we got the 2-minute warning. All right, I better grab the screen and start talking diamond of the week.
Yes.
So I'll be perfectly honest. When I was looking at my diamonds from last week, while we didn't have a positive week, I mean, it was a rough week in the market, so obviously I didn't expect to do that great. We did better than the S&P, but I was looking at the stocks in there, and a lot of them that I had picked earlier before a lot of this decline, they're starting to mature, and I think they're looking better now. So Camping World was one that I pulled out on Thursday. Thursday I do reader requests, and this was my choice because I had to, you know, find one. I can't just take credit for readers, but you have that positive divergence with the OBV. Let me get this specced out. Okay, we had the falling wedge. You could even make a case for a flag maybe, or pennant. We got the PMO buy signal. We hadn't gotten that by Thursday, but we did today. Nice move to the upside, of course, just less than 5%, but RSI is staying positive. The breakout looks like it's going to continue. Of course, upside, you have to worry about this area of overhead resistance that it's coming up with, but I don't know. I'm thinking this chart still looks very positive. You've got the technical rank as well doing pretty great here. So that will complete it for us today. That is your diamond of the week. And my diamond subscribers, you already knew about this last week. So you could have taken advantage of this almost 5% move to the upside. Recommend you come check out our website at decisionpoint.com. We have a free email list you can sign up for. And like I said, that will get you the information you need to go to our free trading room on Mondays. So give it a try, and happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.